Well, howdy there, folks, and welcome into today's video. Hope everybody's doing great as always out there. I want to share with you some very, very good news for stocks in this video here today. Now, all this stuff I have prepared for you, which I started preparing this stuff last night, all this stuff I'm about to share with you, keep this in mind. You don't ever trade off of just short-term stuff that's going on, positive or negative in the market. Sometimes we got to go over these things, right? Very bad stuff for stocks in a given period. Good stuff for stocks in a given period. The main thing to do is not try to trade off of that information, especially if you're a long-term investor, somebody like myself that's investing in companies for several years out. It's important to understand these things. Sometimes you can see opportunities in the market because you're paying attention to this stuff. It's good not to bury your head in the sand, but also on the flip side, a lot of people take it too far and they say, oh my gosh, there's this thing going on short term. I either have to pile into this or pile out of that. And that's where you get yourself into some trouble in the market. So yeah, this is definitely some good information I'm going to give you today. Hope you enjoy this as always. I appreciate you guys joining me. Don't forget to smash as always. And also check out FTX. That will be the first link in the description down there. They are my official crypto partner. And when you trade $10 worth of crypto, you get a free coin using my referral code HolySmokas. Okay. So you have more than likely, I would say 99.999% of people watching this video right now, you have never ever heard of this company in front of your face right now, and that's okay, okay? That's completely fine. So this is one of the biggest container companies in the entire world, okay? Now, if you don't know what's been going on essentially, all right? Basically, if you have to ship any products, especially from Asia, which most companies, unless you're like a software company or something like that, you make some sort of products in Asia, could be China, and you end up having to ship those to the United States, all right? Now, almost every single company that does that is involved in any sort of business like that. They've gotten absolutely destroyed because shipping rates have been insane. And on top of that, container rates have been insane, okay? And so this has been a huge short-term thing that's been very negatively affecting companies for the past 12 to 18 months in a real way. Like, it's hit earnings. Companies even I own, like a Corsair Gaming, for instance, CRSR, they've been hit by this. The cost of a container has like 3x to 4x, and the CEOs called that out in the last couple conference calls. And I can tell you, every single company that does any sort of shipping from overseas has called this out. This has been a huge change in a very, very negative way. And one of the reasons is there's a lot of containers in the United States, but getting those back over to China is an issue in itself. Supply chains are messed up right now. And also, let's just be honest, we don't trade nearly as much with United States stuff as China, with the stuff we get from China. So there's always way more containers over here, okay? Now, with that being said, now that you understand that, this company here you're looking in front of your face, they are starting to increase the amount of containers they're making quite rapidly. The reason this is huge is the more containers they make, the more probability is that container costs will start going down in potentially the back half of this year, okay? As they continue to increase production. If you look at this is from this particular company's actual latest report, okay? The expected increase in profit for year 2021 was mainly attributable to the growth in container demand and the increase in average selling price of dry freight containers as a result of supply chain disruption experienced globally. The group's business performance improved significantly in the year 2021 with a significant increase in sales volume as well as gross profit margin, okay? But basically the situation is, for all these companies, there's so much money to be made now that they're going to try to increase more and more containers. And there are three main companies that make these containers, three main ones. And there's a lot of money to be made right now. So they're going to be producing containers left and right. This is another one of those massive companies that makes these containers, CXIC. And basically their earnings have been incredible as well. And all these companies are going to try to increase production as much as possible. The reason being is there's so much money to be made. When, in this type of industry selling containers, when you get that sort of opportunity to make bank, you better make as much as you can now, okay? Because that's not sustainable. That's not sustainable in terms of getting these sorts of prices you're getting for containers right now. That's not sustainable. And so it's now or never. It's like, this is your time to shine. No, for the reason this matters for the stock market is all these containers that are going to be made essentially will likely start to, I would call it, even out the pricing that you have to pay for a container as a company that's shipping products from China or from Asia in general over to the United States or Europe. So this is good news. it's just in the short term, it's obviously been a huge headwind, and this will go from like a headwind, these shipping costs, these container costs, this will go from a headwind to actually a tailwind, where it will start helping companies' earnings out, because then it'll be like, oh yeah, container costs are going down or staying flat, shipping costs are staying flat or going down, and all of a sudden you end up in a situation where companies have this massive tailwind behind it. It's not going to happen in this current quarter we're in right now. It can start playing out likely in more than likely 3Q and kind of moving forward after that, okay? Maersk, one of the biggest shippers in the world, they just came off a ridiculous year. They reported record earnings, record everything. You got to understand, when it comes to industries, this is not sustainable, okay? These crazy epic record years for containers and for shipping and all these things go in cycles, okay? And every once in a while, they'll get some freak years where things are just going tremendous for them like they are right now. But I can promise you, and I do promise you this will not stay like this forever. That's not the way this works, okay? At the end of the day, these are commoditized industries, and commoditized industries can go through some insane boom cycles for a couple years, and then they have some hard times, okay? And that's just the way it is. It reminds me of a company I was invested in many years ago called Trinity Industries, ticker symbol TRN. And this is a company that I kind of came across a little bit by luck, to be honest. What the heck? Is that a bee? How did a bee get in the house? Hold up. All right, I saved that bee's life because they told me that if the bees go extinct, humans go extinct. So I try to save that bee's life. But anyways, Trinity Industries, I came across this company, luckily, around 2010. I started researching this and was buying it in 2011. The reason being is I was looking for like construction companies at that time. Obviously, infrastructure has been a mess in the United States for a long, long time, and we were coming out of the Great Recession during those years, right? And so I obviously learned about FDR and the Great New Deal and those sorts of things. And so I thought, hey, you know what? I think one of the ways the government's going to try to get us out of this massive recession and get employment going in the right direction in a major way is massive infrastructure. So I was looking at a lot of different companies. Now, this Trinity Industries company, okay? The reason I ended up buying it had nothing to actually do with the construction side of the business. Because what I found with this Trinity Industries company was they were one of the biggest makers of rail cars, okay? But not just rail cars, but specifically ones that could transport oil. Okay. Now, this is why this is huge, because during that time, there was starting to be this massive fracking boom in North Dakota specifically. And so what I thought is, well, how are you going to transport all that oil? I was like, if they're going to do some pipeline, that's going to be like a long process. And look, they're still fighting over that dang pipeline nowadays. It's 2022. It's over a decade ago, right? And I looked at that back then and I was like, man, if they ever do a pipeline, that'd be awesome. But that's going to be a long time in the making. Here we are a decade plus later, right? So what I figured out is the only way you're going to be able to transport all that oil, right, is you're going to have to do it by rail car. That's the only logical way to do it. And so I was like, this Trinity Industries company is so well positioned. And so that, back then it was like on a split adjusted basis, because the stock split over time. On a split adjusted basis, the stock was, $7, $8, $9, $10 a share back then, right? And, obviously their business absolutely boomed. And by 2014, it was like $34 a share on a split adjusted basis. Now, I got out way before this peak happened. I got out here. And, usual Jeremy stuff, I never can sell at the top. It is what it is. But nonetheless, I made an incredible return on investment, and that was a huge boost for my confidence with Trinity Industries. I was only in it for a few years, but it did me insanely well. But when it came to Trinity Industries, I knew with Trinity Industries, they were likely getting toward peak, okay? And I understood, this massive boom cycle we're in, this isn't going to last forever, right? And I was even starting to see had troubling signs about how many people were trying to frack for oil, and I was like, dang, man, if oil price starts going down, obviously a lot of these over-leveraged oil and gas companies could start going bankrupt and things like that. And so I kind of saw through what was going on there. And then, obviously, like I said, I didn't sell the top, but very shortly after, Trinity Industries, their earnings did peak. And after that, it just kind of started on like a vicious downtrend. They had peak earnings in 2015. And then it kind of started getting down from there. And if you look at, what's happened over the last many years, the reason being is oil and gas just was in a tough spot for quite a while. Now, Trinity Industries, the funny thing about that stock is starting to come back now because there's a lot of excitement around oil because oil price has gone up. We're going to touch on oil in just a moment, by the way. But nonetheless, it kind of reminds me of the shipping container situation. You can go through a year, 2 year, 3 year, maybe even boom cycle for this, but but that's not sustainable. This is a commoditized industry. Selling containers is commoditized. Shipping products overseas is a commoditized industry, and these things will normalize. They can go through these little boom cycles, but that's not normal, and that will not last. I promise you that. That's not the way this works, okay? Next piece of good news we have for the stock market is oil has started to come down, obviously, from those peaks of 125 plus to, today around 100-ish, somewhere around there. Now, the reason this is big is because we just spoke about transportation of, overseas shipping and containers and things like that. Think about it also from the perspective of I don't want to say every single consumer, but unless you have EVs, you go to the gas station. This affects your pocketbook, right? It affects, obviously, every single company that has to ship products in any way. I don't want to say ship products, but transport products across the United States of America, because most of those are transported by semi, right? And so this is obviously something that hurts the overall stock market earnings, another headwind, and that headwind is starting to slowly be eroded here. And so this is one of those things if you want to look at some good news, this is definitely good news that we didn't just continue that massive spike up. Now, do keep in mind, we still got to get, obviously, through the summer. We're in April right now, so we're still going to have to get through May, June, July, August. Those are usually boom months, especially with travel. Travel is going to be insanely strong, in my opinion, over the next 6 months. Trust me on that, okay? Travel is going to be insane for the next 6 months. Yeah, just trust me on that. The next 6 months, travel is going to be insane. So that's obviously a kind of a negative thing when it comes to, if you're thinking about oil price potentially going up. But the fact that we didn't continue this massive step up is huge for the psychology of the market and huge for earnings as well, okay? So that absolutely matters, right? Next piece, lumber. We know lumber is extremely important for building and constructing, everything from an apartment building to a house. This is what we build out of in the United States of America, right? Lumber, right? Unless you're building some massive building or something like that, lumber is used in any type of smaller construction. And so lumber has started to come down quite a bit off of many of its peaks. Obviously, it peaked out here in about right around a little before mid 2021, right? And then we came down insanely fast, and then we had this big boom cycle kind of again, and now lumber's kind of come to a more normalized range there. The good thing with lumber is United States, we can kind of control that, right? It's not like we have to, get lumber from China or something like that. We can control that. So unlike the container situation that we're kind of waiting for companies to play out and that whole thing to play out, lumber is a very different situation. So this is very, very good. It would be even better if lumber came down more to more normalish ranges, but we do know residential construction is insanely strong right now. And we do know that at the end of the day, residential construction is built with lumber, okay? And so this is good news, but don't get too excited quite yet. We'll see how that transpires throughout the year. I don't know why this one's in here. This is just bad news for Oatly in the short term because, if oat prices stay up, that's not a good thing there. I don't know why. I think I put that in the private stock group. That wasn't supposed to be for this video, but whatever. You guys got to see that one there. Iron ore also has come down quite a bit in price. Can't get too excited about this one yet because it is coming back, right? It's far off of where it's peaked out in kind of around mid 2021, but do keep in mind the trend's kind of moving up there. So this is good news, bad news. It's it's good news from where it was at, but it's kind of bad news that it's moving back up. So that's one to pay attention to there. Steel, same exact situation. Steel was peaking around September 2021. It's down significantly off of that price, but on the flip side, it's still kind of trending up there, okay? So that's one of those, the jury's still out on those, okay? Now, next thing that's good news for the stock market, what you're seeing in front of you is very, very good news for the stock market, okay? And I know you're probably looking at that and you're like, wait, Twitter going up 27%? Why does this matter for the stock market, okay? The reason this matters for the stock market so much is you got to keep short sellers at bay in the stock market, right? And you've got to keep longs always somewhat excited in the stock market. So a moment like just happened here with this Elon Musk and Twitter situation, right? Where the stock spikes up 27%. This calms shorts down a little bit because imagine, over the past month you started shorting Twitter stock, right? You're like, I think their user base is going down, whatever your bearish thesis was, or, your revenue is going to go down or something like that. And so you start shorting this stock, right? And next thing you know, all of a sudden this news comes out with Elon Musk and you lose 27% up on a day, and you're like, what? Are you kidding me? This has nothing to do with necessarily the fundamentals of the company, but I just got absolutely blasted with a 27% upside move here, right? And so these are sorts of moments that are important to keep the short sellers kind of concerned about these things, right? Because something like this can come out of nowhere, where an individual investor buys in and it makes the stock go up like crazy, right? Or another company buys in, it makes the stock go up like crazy. These sorts of situations, we haven't seen a lot of this the last couple of years since Rona started, but this is actually I don't want to call it a normal phenomenon in the market, but it happens in the market, where you will get another company buys in a stake in another company, and next thing you know, that stock spikes huge, right? Let's say, this might be wishful thinking, but let's say like a Procter & Gamble bought like 20% of Honest, right? And they wanted to benefit from Honest as the company grows over time, and maybe Procter & Gamble gave them some infrastructure or some help when it comes to distribution or whatever it is, right? Those type of deals can happen out of nowhere, and the next thing you know, that stock can go up 27% in a day, and that's a pretty big market cap. Twitter going into today was a $30+ billion market capitalization. Now imagine when that happens to smaller companies. Also, from the long perspective, things like this are exciting, because you do remember that you can have ways your stocks can go up outside of just the entire market going up, and outside of just your company beating earnings. There are these kind of freak situations that happen that next thing you know, your stock is spiking because of news that Elon Musk just bought some shares, something like that. So this, I will say, this matters big time for the psychology of the market, and something to be excited about, okay? Obviously Twitter shareholders are pretty darn happy, because the stock had just been sliding. It was into the 30s. It was getting near 52-week lows, and just a massive day for Twitter there, okay? Next piece of good news for stocks is when it comes to the VIX, okay? So what you're looking at here is a 1-year chart of volatility, the VIX, okay? Now, the good news is the VIX is coming down massively, and I mean massively. We were peaking around 37 here back in, that would have been in March, okay? And, the market was obviously very, very shaken around Rona. It was either February or March when the VIX was spiking. I can't remember the specific day. I know the market kind of bottomed around March 14th, but the VIX, I think, technically was at its peak prior to that, okay? And obviously, the wall of worry has started to be destroyed. And because that wall of worry is starting to crumble, the VIX has spiked down massively, and here today we're sitting at a VIX of about 19. Now, do keep in mind, a VIX of around 19, 18, whatever you want to call it, is still on a little bit of the upper ranges of a normal range, and we'll get into normal ranges in just a moment. But this is one of those things that if you're looking because the thing you got to understand, you're going to go through some time periods in the stock market where the stock market's ridiculously volatile, right? And that's something that all of us investors have to understand. That happens, right? And sometimes we can get some tremendous deals in a very, very volatile market. And from a long-term perspective, you should like those type of markets. But they don't happen very often, right? They don't happen very often. And the fact is, right, most people, they don't like to invest when things are crazy, when it's scary. And why did the stock market go down every time things are crazy and things are scary? Because people don't like to invest in that sort of market. So if you're talking about attracting a lot of the money that maybe has not been as enthusiastic out there in terms of putting buying pressure on the market, right? A lot of those folks start looking at VIX under 20 and they start saying, okay, seems like the coast is starting to get clear. We can start putting some more buying pressure on a lot of these stocks and on the market in general, and start coming in and putting a lot more buying pressure on the market than there was selling pressure when the VIX was spiking high, right? And so this is another one of those factors, right? And it's very important for the psychology of the entire market, fund managers. Because believe me, not a lot of fund managers like to buy when the VIX is over 30. Never mind over 35. They look at that and they say, nah, I'm good. I'm good right now. If anything, there's sellers in that market. How do you think the VIX goes so high, right? Because there's so much selling pressure. Now, you do always keep in mind for yourself, usually if the VIX spikes over 35, and I covered this when we were kind of going through that time period, usually whenever the VIX is over 35, it's usually a great buy the dip opportunity. You don't get many time periods where the VIX goes over 35. So when you do get those sorts of opportunities, it's usually, you can look at the history of the VIX, and every single time it ever spiked over 35, it was a great buy the dip opportunity. So do keep that in mind. Now, if we go ahead and we pull up, I want to pull up you guys a 5-year here of the VIX, so you can kind of get range understood, right? So, this is where you should usually be, between about a 12 and about an 18 roughly. And so we're at like the peak upper ranges of what normal is in the market, right? but that's where you should be over time, okay? And so that's more good news for the market, okay? So there's definitely some good news kind of going for us here. This isn't the only good news, but there's definitely some good news. And last piece I'll just kind of throw in here, and I didn't make any slides for this, but I thought it was important just referencing this, is there's a lot of stocks that are still beating down dog stocks. And I'm not just talking about small caps. I'm talking about companies like Meta, companies like PayPal, companies like Netflix, right? Even a company like Amazon hasn't moved its stock price in such a dang long time, like over a year and a half. A lot of these companies are set up like if they just have a little something good this upcoming quarter, a little positive commentary, small beats, their stocks can fly, okay? They can absolutely fly. And so if you want kind of that last lever of some good news, it's that. All right. So yeah, hope you guys enjoyed this video as always. Don't forget to smash. I appreciate you guys joining me as always. Make sure to subscribe to the channel. Also, FTX, check it out. It will be pinned, or not the pinned comment down there, but the first link in the description. Much love and have a great day.